So this could not have been more well timed. I think that we tend to be lucky with the dates because there's obviously been a lot of macro news. There's been a lot of volatility in the market, and Placer always has a great point of view, whether it's from the landlords, the tenants, from what they're seeing with regards to foot traffic and more. And so I think RJ today, we're going to focus on not only the trends, but also kind of do like a mid-year health checkup or check-in. And, grocery, which is where you tend to see macro weakness first. We're going to talk about that and more. And then, I'm going to ask, kind of maybe some less traditional questions that RJ and I usually talk about more on the macro side to see really kind of what they're seeing in the cracks in the cement, if you will, to see if we can get any sense of what's really happening. So RJ, with that, it's a tall order, but I'll turn it over to
Yeah,
you.
no, you're exactly right. I mean, this couldn't be any more timely. A lot of good topics to discuss, a lot of questions we're getting. I'm sure you're getting the same questions too from investors, from landlords, from retailers. So a lot to unpack today. So I'm excited to jump in. Just a quick, run of house, what we're going to cover today. Just do a quick intro on Placer AI, what we do, how we get our data. Then we'll talk about some of those retail trends, and then shift gears a little bit more, talking about some more consumer behavior, because I think that is one of the best parts about the Placer data is being able to see changes in consumer behavior in real time. Obviously, if there are questions, we'll have time for that as well throughout the presentation. So fire away. We want to hear your questions. We love it. So brief introduction on Placer AI. We are a location-based analytics company powered by mobile data. In simpler terms, that means we can come up with foot traffic estimates for any physical place in the United States, whether that's an individual retail store, shopping mall, airport, downtown area, anything you can draw a shape around on a map, we can get foot traffic data for. Well, how does it work? Well, we partner with several hundred mobile app companies, and through those app partnerships, we are given 24/7 location data for a panel of 25 million devices. Importantly, any personal information is stripped away before we even receive it. We wouldn't know who that device user is. We just know that a device has gone into a certain geofence that we've drawn on a map. Personal information is collected whatsoever. From that panel, that 25 million device panel that we have, we can then use other variables about that location and then use the AI and Placer AI to generate actual full estimates for that location, take that sample size and extrapolate it. I like to think of our foot traffic data as kind of the what is going on, how many people been to a store, how long they stay there, where they go after. But it really is the other data sets that we partner with, whether it be spatial AI, demographic and psychographic data, AGS, census data, Experian Mosaic. It really completes the picture and gives you the why and the how of what's going on. So it's not just a matter of, what kind of visitation centers are we seeing? Am I seeing a shift in demographics? Am I seeing a shift in behavior? And so the other things that we can do with our data, visitor journey, demographic studies, trade area analysis, market share, all this cool stuff. So if you haven't seen it, please check us out at Placer AI. We've got a lot of free tools that you can use. If you're interested in seeing more based on our discussion today, you can certainly do that. So let's get to the fun stuff here and talk about retail trends. Because I think this has been kind of the biggest topic is, what is going on in the consumer? What gives is kind of the number one thing we've heard over the last week is, I hear one thing, I see another thing. What is really going on here? And I think, above all, what we're really seeing, this year, I think if I had to sum it up in one frame is, we do really still have a very value conscious consumer. I think we've got a consumer that does want to spend, but doesn't want to spend a lot. They are certainly gravitating to more dollar and discount stores. Grocery stores is one we've seen up, but that really is continuing to be more value grocery than anything else. Superstores are starting to have a nice year too. So we continue to see this. But what is really unique about it too is that it's not just low price, it's unique products at a low price or differentiated products. People still want to stand out. There's this element of standing out post-COVID. I want to make myself look different and stand out in a crowd. So there's that element too that really we see that playing out. Restaurants is an interesting one too, just to kind of frame the discussion, because I think this is the year, in the first half of the year, we started to see a lot of competition between restaurants and groceries. So food at home, food away from home. And with restaurants, being anywhere between 20 and 30% of prices where we were just 3 years ago, I think we're starting to see a lot of pressure from grocery and superstores and convenience stores on restaurants. Then we've got kind of some of the specialty categories here, like home improvement. This is one of those categories that we saw a lot of pent-up demand for, a lot of pull forward demand coming out of the pandemic, and now start to see normalization. So yeah, I think there will be improvement. I think that, the home improvement will have a recovery, but right now it's still kind of in a situation where consumers are not spending as much on the house, interest rates and other things like that impacting it. So I know that's a lot to start off with, but Deborah, any impressions or any thoughts you had there?
I think that your kind of approach to thinking about, the consumer wanting new and novel merchandise, and also with some of the price gaps and this focus on value, we are seeing a lot of the grocers, right, who have continued to build out their private label assortment. And in some cases, over 40% of their sales are private label. So not only are those higher margin, but that does lead to a stickier customer. And I think that's some of what you're going to talk about with some of these kind of more value oriented, you know, grocers and supermarkets who also tend to have a much higher penetration of private label. And I think all of these trends kind of coming together is what we're going to talk about today.
Yeah, I think you're right too. The private label side has been one of the more interesting trends, and it's gotten a little bit of attention, but I don't know if it's got enough because we're starting to reach a point where some of these private label brands are really coming into their own and becoming, kind of recognized brands. I mean, I think of private label brands that are really standing on their own. It's basically Kirkland at Costco, but now we're starting to see some of these other ones, from Target and Walmart and others, really kind of, be a preferred brand in a lot of cases too. And I think that's been what has been driving a lot of success. I mean, if we look at kind of, it's hard to delineate with our data, what exactly is the driver into that store in some cases, but, you do see a higher percentage or the visit trends for those that skew more towards private label, particularly the ones that are innovating around private label. It's been a story that we've kept our eye on all year.
I think when your private label has made it when it starts to show up on other marketplaces, which we're seeing with all the three that you just mentioned. So I
Yeah.
think that's a really good point.
Yep. So with that last slide, with our data, one of the things on that last slide, that includes everything. So the year-over-year numbers we looked at, that includes both increase in visits per store as well as new store growth. So you see the dollar stores leading to. There is a component of that would be driven by new store openings. Obviously, dollar stores have been a higher growth unit opening story. What we've done here is looked at visits per location. So this is going to be a little bit closer to a comparable number for 25 different retail categories. And again, what you see here is the ones that are outperforming in the first half of 24. Again, largely value oriented. So value grocery, dollar stores, warehouse clubs, beverage alcohol retail. So you kind of see that theme playing out. The other thing you do see is some of these categories where, again, it's something novel or at least helping you stand out. So beauty and wellness, and to some extent fitness. There's an attachment there. Some things in there too. And even if we took kind of another step deeper too, I'd say some of the more idiosyncratic apparel retailers, the ones that are kind of more fast fashion, have stood out kind of from the other groups. So it's kind of interesting to kind of see all that play out. On the flip side, you do see some categories that shouldn't be terribly surprising to see at the low end. Movie theater's been hit hard by the lack of tentpole releases, so that's been kind of that thing there. We talked about home improvement, we talked about home furnishing. A lot of these categories that are bigger ticket, potentially kind of a little bit correlated with interest rates, or sell that big pull forward in demand during the pandemic, haven't quite hit that replacement cycle yet for things like home furnishing, consumer electronics, sporting goods. We see fits and starts there, but really we haven't hit that full replacement cycle. We might start to see it around holiday this year for maybe consumer electronics, but that's kind of what's seeing there on kind of the more specialty categories. So just wanted to at least kind of frame it just more on a comparable number than just looking at unit growth. So this is kind of what we've seen across a wider number of categories here.
Yeah, I think it's interesting on the drugstore side. We've heard that, and we've seen the data that as they're focusing more on, let's just say that providing to the whole customer. So whether that's vaccinations or having, kind of a clinic or having certain, kind of days where there's nurses, that consumers are in many cases turning towards drugstores for their actual healthcare. That could be due to lack of GPs or whatnot, and it also could say more about the value-oriented nature of the consumer right now. But I think, on the drugstore side, I think that's been interesting. And, I think going back to, right, this whole thing kind of screams value, because when auto parts companies are strong, right, this is where consumers are trying to not only take care of their existing vehicle, but also, they're doing more themselves as opposed to bringing it to the dealer, et cetera.
Yeah, exactly. There's a lot of that I think is the prevailing message there. And going back to drugstores, that's been an interesting category to look at. I mean, I don't think everybody on this call is probably aware of all the store closings taking place there. both Walgreens, CVS are optimizing and right-sizing their store footprint right now. But it has been a little bit of a bounce back year. I'd say last year was kind of a tough year for them. You were lapping some of the vaccine periods and people coming in the store. It's a little bit of a bounce back year, and I think you're right. I think some of the focus started to help. Now you're seeing a lot of competition. Amazon clearly has their sights set on that category as well. We do see a lot of times when a drugstore leaves a market, that visit is backfilled by maybe warehouse club, superstore, grocery store. So they've got some competition they got to face with, but nice to see some of the numbers there just on a year-over-year basis for the drugstore category.
Yeah, I've been in stores a lot throughout the US and the world actually. And it's been interesting going back to think about foot traffic and whatnot. I've got photos upon photos of, there's maybe one person in line at the front, and there's like 8 to 12 people deep to pick up their prescriptions. And so my whole thing has been, talking to these folks about like, how do you think about merchandising, right? Somebody's waiting in line for 5, 7, 12
Yeah.
minutes. And so there's a huge opportunity here. So I think it's really interesting.
So just I thought I'd give a little bit of perspective where we kind of saw throughout the year here and kind of, walk through each month and kind of see, kind of what trends we saw. I think start the year was kind of a negative month for just about everybody with weather. That was a weather month, pretty much write that off. February, we saw some rebound, again, skewed more towards the value categories, but we do see one of these trends with, kind of, we'll talk about it a little bit later too. The idea that people are willing to spend for holidays and events, really came through again. Valentine's Day again this year. So we see that beauty and self-care. We see that with other categories as well. That is something that we continue to see if we looked at the week over week numbers, is that consumers are very much value focused in kind of the normal periods, but are willing to show up for different events and holidays. We see it with dining. We see it with beauty and healthcare. We see it even department stores, which are down February. But that's something that we generally do see. March, we saw a couple other events in there as well. We did see the shift of Easter into March, so that was partially what picked up that. As a result, actually, because of that calendar shift is really why you saw April down as much as it is. Also, we went from 5 weekends a year ago to 4 weekends, so that's partially a calendar shift as well. But then kind of more focus on kind of the second quarter and what's been going on. We actually started to see, at least May and June, it felt like consumers felt, maybe as things were getting normalized. Maybe we started to see a lot of the rollbacks and price cuts at some of the superstores and things like that. We start to see bit improvement, across a lot of categories. And in fact, June was probably the strongest month in terms of visits that we've seen, for the overall retail space. Now we've given back a little bit of that in July. There could be some noise in that too. I wouldn't say that necessarily is a trend, but generally where we've kind of seen the last couple of months, some solid numbers, and I think people have kind of adjusted to inflation to an extent. I think that that just kind of the sense of normalization, I think, has kind of helped in that. We've also seen a bit of shift, and I know we can talk about this later too. Experiences have been such a big part of consumer spending the last couple of years. Seen a little bit more of a normalization on that. I mean, people are continuing to spend on travel and experiences, but a bit more balance with experiences and goods this year too. Maybe pent up demand, maybe you didn't buy that product that you need this year, so that's kind of thing. But generally speaking, as we kind of leave the second quarter and into the third quarter, generally feel like we've got a little momentum here in terms of spending. So I don't know if that's what you're seeing too, Deborah. Your kind of your thoughts on that one.
Well, first of all, I think it is interesting, this whole idea around kind of the consumers coming out for holiday and events. We've seen as early as the first week of July, Halloween in many stores, and we're even starting to see Christmas. So things that we haven't seen before, just in terms of the timing, I think is very interesting. Secondly, as we've gone into the second quarter, right, you talked about this idea of kind of rollbacks and, kind of this focus from the retailers and CPGs and, casual dining and, QSR on price. And I think that that's really paid itself back in the second quarter. So maybe margins will be a bit compromised, but we are definitely seeing, probably better leverage and a stronger top line. And there's a really interesting question from Molly. Thank you in the chat. And it's a good point. Outside of January, home improvement doesn't look as bad as presented in earlier slides. Has the improvement and recovery already started?
Yeah, we'll get into that too. There is a bit of recovery, but it's actually interesting where the recovery is taking place in home improvement. I don't want to front run too much on this one, but if you look at who's really winning in visits in the home improvement category, it's not Home Depot, it's not Lowe's, it's not the big box groups. It's actually the smaller box guys. It's Ace Hardware, it's Harbor Freight. And if you look kind of on a map where people have migrated to, what we saw the pandemic is this migration away from urban to suburban and rural. We saw migration away from big metros like New York, Chicago, Los Angeles, San Francisco, moving to Phoenix, pretty much every major market in Texas, Central Florida, the Carolinas. But really that focus on kind of that move from urban to suburban and rural, as people have started to move to these smaller cities under 500,000, under 200,000, under 100,000. That's where a lot of the growth has, and it's been where a lot of the higher household income growth has been. And so when you look at kind of the map of Harbor Freight and Ace Hardware, where they are in the US, it overlays pretty nicely with that too. So we'll get into some of the numbers on that, but that is where I think some of that recovery is happening. It may not be at the big box, but it's more at the local and kind of more rural and suburban markets. There is where we've seen that recovery, where perhaps the consumer is in a little bit better shape, has a little bit more discretionary income to spend. Maybe that's, was a permanent move and still doing things to the house. So that's kind of where we've seen the growth there. But it's a great question. Thank you.
Yeah, there's a question from the prior slide, which actually I think is a good one. So I'm going to get it out there from Michael. But yeah, this question around specialty coffee trends,
Mhm.
where they had thought they were starting to trend positive, but that's not necessarily what the slide showed. So maybe we can just talk about that category specifically.
Especially coffee is a very interesting to watch, because if you look at the overall category, it's doing okay, but you have a situation where the number one player, Starbucks, is actually lagging. And I think if anybody listened to their conference call last week, I mean, it's no surprise there, reported a -6 in terms of US comparable transactions. And if we look, if we normalize, the company talked a lot, an increase in multi-beverage orders. And so if we normalize for that, we're seeing somewhere in the ballpark of, -3 or 4. And that's generally what our data said on a year-over-year basis when we isolate for visits per location. They've been in a store growth mode. But anyways, where I'm going with that too is that they're still trying to win back that occasional user, which I think right now there's so many more options out there, whether it be in the specialty coffee category, a lot of kind of the small format, drive-through formats like a 7 Brew, Dutch Bros, 151, Scooters, PJs, you name it. A lot of interesting players in the space that are starting to really ramp up. And because they've expanded their footprint so aggressively, people have more options than they had before. So I think that is wearing away a little bit at Starbucks. The other thing too is Starbucks too is that they're still in this kind of gray area where you built a brand on experience, but you still need to get people through a convenience. You got to satisfy both that experience and convenience need state, and it's really difficult to do it out of the same box. And they still kind of have to figure out what stores do I really want to focus on that convenience customer, what stores do I really want to focus on the experience customer. So that's the thing too. And then on top of that, how do you attract that younger audience that has been going to Dutch Bros for energy drinks or things like that? We're starting to see a little bit more variety in a product assortment for Starbucks, and something that I think perhaps we need a little bit more too. But we have noticed that since the product launches, that we have started to see a little bit of improvement in visitation trends. Now they're not back fully; they're still running negative year over year, but that has been encouraging to start to see. And again, ties back to this idea of kind of innovation and novel, and people wanting something unique right now. They're not going to pay a lot, but if you do introduce something new, they are willing to pay up for it. So that's kind of where we stand, especially coffee. Categories doing okay, but Starbucks is still kind of figuring out, this navigating this changing consumer environment.
And a few other housekeeping questions. This is from Sheila. Do you count Aldi as a discount store or grocery store in the chart?
This one would be count Aldi on a grocery in this one, so that would be driving it. Aldi is the number one in terms of year-over-year visits, both in terms of just absolute, because they have been growing. But if you look at visit per location, they've done very strong. So this one would be count on grocery. So great question. There was an earlier slide where we had value grocery; it would be included in there as well. So thank you for the question.
And then is there anything that you would call out in terms of online versus offline grocery? And, since many of those online sales are fulfilled offline, how are you able to measure that? I mean, right, we're all in the stores and we can all see the professional shoppers
Mhm.
who are, just I think their hustle is great, but just stay out of their way. And
Yeah.
is there anything that you're able to share that's quantitative versus qualitative?
Yeah, what we can do is based on dwell time. So we can isolate visits by dwell time. And so if we see a visit that's under 5 minutes or under 10 minutes, really, that is most likely a buy online, pick up in store visit for a customer. So we do see the trends there. I would say that when we last looked at that, I have not looked at that in probably about a month or two. When I last looked at that, it had kind of moderated year over year. It at least was up year over year in terms of the visit trends, but it had moderated, kind of decelerated a bit. Yeah, I think what's going on, and we're going to get into this actually just on the next slide. The behavior, in terms of what's going on in the consumer space right now, and particularly food retail in particular, people are shopping a wider number of locations than they ever have before. Actually, it's one more slide ahead, Stephen. I got ahead of myself there, but we can skip ahead to that one. This is what we're seeing here is actually people are shopping a wider number of locations than they ever have before. So if you look at grocery, the amount of visits to chain grocers compared to pre-pandemic is up 12%. The number of visits to C-stores versus pre-pandemic is up 17%. Dollar and discount up 23%. And so what this tells us is people are shopping a wider number of locations than they ever had before. There's an element of consolidation in here too, as well. Larger chains taking, share or putting in smaller chains out of business. But largely speaking, this is just showing a change in behavior and that people are looking for deals. They're going to more places to find that deal. You're probably going to your traditional store less than ever, but spreading it around. And it's really interesting to kind of see that interplay. I don't ever remember a year in food retail quite like this, where people are doing this. And I would include online visits to tie back to the question here. Online visits certainly a part of that too. People have gotten really good at experience or figuring out where the deals are right now, almost to the point where now you're spending less time. You've got this routine that you've set in. 2023 was a year you learned where the deals are and what retailers you can trust and rely on for those deals. Now you've kind of set that in stone and continue to visit there. Last year we didn't see a lot of visit frequency was down for a lot of chains. Now visit frequency is starting to inflect, and a lot of the chains that we look at are starting to see higher visits, particularly those customers they acquired last year on those deals.
Yeah, if I go back and put my food retail analyst hat back on, you have not seen data like this in quite some time, and it's never usually a good precursor to anything from a macro perspective.
Yeah, there is that element too. This could be something that could be a red flag on that end too. And again, that it continues to persist too. It's not like, we've seen people start to, okay, now I've had a little bit more discretionary spending. I'm going to return to some of the specialty grocers. I'm going to return to some of these. This is pretty persistent. I mean, every month, like clockwork, we continue to see visits up and people seeking out those deals. And I think to the point earlier, when we started to see all the rollbacks and price cuts in the second quarter, those were the winners. Those are the groups that, that we saw visitation trends to immediately. And, it's something people will respond very quickly to this too. I mean, we talked a little bit about competition between QSR and, grocery. But what's interesting too, is that QSR is now fighting a battle with full service dining. Month of May, we saw big promotions from Chili's and Buffalo Wild Wings, and almost overnight, you saw, the whole category got lifted because people started, hey, I'm getting a pretty good deal here. And if I'm going to, pay, comparable price for a QSR versus a full service restaurant, I'm going to go there. I'm going to, choose the experience on it. Now, some of that's given back because we started to see the value wars across the QSR space. Burger King, Wendy's, McDonald's, all of them have been doing $5 bundled meals this summer, or some other value packaging. But it is really amazing to see, as soon as these companies roll these out, consumers respond, particularly lower to middle income consumers on that front. So, Deborah, I think you bring up a good point there.
It's really interesting. I think we're going to continue to see more of it as is illustrated by this chart.
Yeah, so what we're showing here on the left-hand side is actually we paired our visitation data for the grocery category with PCE data. So we have both real and nominal on that chart as well. And then we also, on the right-hand side here, we've got the average dwell time for grocery, and that's the first quarter of 24 compared to the first quarter of 23. So people are shopping a wider number of locations than ever before. It makes sense that we're going to see the amount spent per visit start to come down as well. So people are shopping a wider number of locations to fill their basket, but that average ticket per visit is coming down because they are seeking out deals and they're buying less per visit when they go out for these different deals. What's interesting about the dwell time is that actually this year was a bit of inflection. Last year, we actually saw dwell time go up, And I talked about the last year being kind of that year people try to figure out their routine in terms of value, year of discovery. A lot of the increase in dwell time, I think, was because people were spending more time in the aisles looking at prices and doing some price comparisons. This year, we've started to see, hey, I've got my routine. I know I'm getting a good deal here. So we're starting to see people more comfortable in that dwell time come in, as at least our hypothesis on that. So it's kind of interesting kind of seeing these changes in behavior in real time with our visitation data.
Yeah, I also think that retail media is coming into play here in a way that, we didn't see a year ago, where you're seeing much more targeted, let's just say investments by CPGs and whatnot. And this idea that they're starting to understand consumers and consumer behavior in a way that we haven't seen it in groceries. So I bet a lot of that's starting to show up here as well.
Yeah, I think I think you're exactly right on that too. And I mean, we taught a lot of the retail media, both digital and in-store groups that are out there. And I think you're exactly right. I think they're getting a lot smarter. They know what data they need to put the best foot forward, find the right partners to advertise with, find the best times to advertise to certain consumer groups. I think we are starting to see, I mean, it's still very early days, but I think we are starting to see a bit of maturation for the retail media space. And I think that is impacting the behavior that we're seeing as well.
Exactly.
So just kind of driving home the point and kind of wrapping it up on the food retail space. But one of the interesting things we looked at, when McDonald's talked about that lower income consumer on their first quarter call, we're seeing pressure there. And what was interesting is that if we went back and looked at the cross visitation between Aldi and McDonald's, and what we saw in the first quarter of last year was actually there was about a 17% overlap. So 17% of McDonald's visitors also visited an Aldi last year in the first quarter. This year, that number jumped up to 24% and actually is held pretty close to that in the second quarter as well. So it's not just quick service restaurant chains that McDonald's and other QSRs are competing with. It is now value grocery. Convenience stores are another one. We've seen a pretty big lift in competition. A lot of innovation taking place at C-Source too. I think that's a category that could be really disruptive in the years to come. Even superstores and some of the prepared meals that we see on that front are kind of starting to be more competitive. So just something to kind of wrap up the discussion here, that we are starting to see it's the full retail space, food retail space in general, that we're seeing a lot of competition, and that competition is really intensifying right now.
Yeah, and I think the C stores are doing an excellent job, if you will, at almost creating this kind of community. And something that people are still looking, right? We're getting our coffee, we're chit-chatting about the kind of coffee and whatnot. And so I think that it's been very intentional, and I think it's very much working for them. And going back to what they're starting to kind of think very differently about what drives traffic and also loyalty. So I agree with you that it is one of the more interesting spaces when it comes to innovation right now.
Yeah, and you're right. I mean, it's not, if you think about it, it's not just the one. I mean, if you ask somebody to name, what's kind of the cult following in the C-store space, I think most people would say Buc-ee's right out of the gates. And certainly that is the case, but it's not just that either. I mean, it's a Wawa, it's a Sheetz, it's a 7-Eleven to some extent even. We're seeing this loyalty and these, behavior patterns with our visitation data. Really an interesting story, and kind of flying under the radar a little bit too. I think that's one that maybe needs a little more attention on it too. It's been fascinating to watch some of the success stories in this category right now, and the brand loyalty that they've been able to build because they've been innovating. I talked to a lot of restaurant operators, a couple months back, that said the baton had been passed in terms of innovation, in terms of not only, food innovation, but also some of the improvements in store, the experience, and how they've got all the pieces to work. A lot of times, C-stores were copying QSRs, but now have taken that and really kind of made it their own. So I think that it's, a really innovative category.
They're also partnering more with some of the, kind of rapid delivery,
Yeah.
kind of companies and apps. And that, so it's like, okay, so, I'm getting my dinner from here, but if you want to add on, right, you can get, $20 worth of product for $7.50. And so it's just continuous innovation. And I think this whole surprise and delight, we're not used to from the C stores.
No, we're
And
not, but they're doing it. They're doing it. Yeah. So I think you're exactly right. And that is something we've seen too with the data. We've seen just the frequency and the surprise and delight element, I think, has been a great story.
absolutely.
So we couldn't get through a presentation without talking at least a little bit about shopping centers and where we stand with things. We've talked a lot about the retail and the retail categories here, but it actually has been really encouraging if we look at kind of the overall visits to shopping centers right now too, and where we stand. The left-hand side, we're showing visitation trends compared to 2019. Most cases were actually above where we were in terms of visit trends to shopping centers. At least we were in the second quarter. Some of that we talked about, is what's going on in specific retail categories. But what I think is interesting, if you kind of look on the right-hand side, and again, if we kind of January, we throw out April because of the calendar shift. Generally speaking, some positive numbers there. And what if we drill down even another layer deeper? I think the message here is those centers that have really adopted a mixed use strategy, more entertainment, more community type settings, more events, and even to some extent marketing the mall as a brand itself. The commercial real estate companies that were early on that are seeing the most success. They're seeing higher number of visits. They're seeing the trade area expand. They're seeing the tenants, their visits are higher than their comparable peers, the same stores at other malls right now. So I think a lot of the success we're seeing is this move to a mixed use strategy and really bearing out some solid returns on that front right now.
What are you seeing in the department store space? I know we looked at the numbers earlier, but how is that impacting traffic? And are we finding, we keep hearing about this idea of like the new anchor.
Yeah, it's a great question. It's something we've been keeping an eye on too, is obviously there's a lot of things going on in the department store with Macy's plans to reinvigorate their store base, some of the other changes there. It has been interesting because we did see a lot of department stores, leave maybe an anchor position, maybe take a smaller space, which we'll get into as a little bit as well. But we have started to see kind of these new anchors, if you will, whether that's kind of an entertainment type place, like a gaming type / dining type experience. We've seen some other type tenants, more experiential type things, take over, and some of those have had success. I would say, it's a bit more mixed on some of those, what the anchor's replacing. But I think those that have been a little bit more, hey, we're not just going to let a box be empty. We're going to try to be creative with it. The ones that are kind of thinking outside the box, pardon the pun, are really the ones that are kind of jumping out to me. I do think we have kind of seen the face of the anchor really change. And those have kind of really embraced some new ideas on that front are the ones that are seeing high visits. So department stores in general, I would say are generally down year over year. There's some categories, I would say the more value focused department stores are holding in better than the full price. But some of the full price guys that are doing some really innovative things and changing up what goes on in their stores, and more entertainment, more more engagement. I think that they're seeing some success as well. I mean, we've seen groups like Dillard's, even for example, is one that's actually held up pretty well on the full price side. And I think if you look at kind of what Macy's is striving to do in terms of better curation of product, better engagement with the customers, training and sales force in a new way, manage these out of a smaller box in some cases as well. I think there's a lot of success stories that we've seen in retail that we can kind of point to as a blueprint for what Macy's is trying to do right now.
Well, it's everything their customers been asking for, right?
Yeah, exactly. Which is a perfect segue into to a changing consumer here as well. So shifting gears, just kind of some of the bigger picture terms. I mean, and some of this will tie back to the discussion we've had here, but just talking about some of the trends we've seen from a consumer behavioral standpoint, because I think this is where a lot of the data we have can really help you kind of put some quantitative data behind some of these more qualitative aspects going on. So just wanted to walk through some of the things that we're seeing from a trend perspective here. We talked about superstores and seeing a strong start to the summer. I do think a lot of this is coming back to the rollbacks that Walmart had talked about, but Target's certainly been in front of that too. Costco and the warehouse clubs, which honestly, the side note for those guys has been they've been really picking up a lot of the younger audience. When you overlay kind of the trade area with visitation trends, it really does seem like a lot of the millennial households, that's where they're starting to pick up a lot of share. But again, talks this idea of value, and the ones that have been a little bit more aggressive in terms of price cuts generally have seen the most success right now. I think that as we start to look at kind of back to school, that sets up nicely for a lot of these categories as well. So that's kind of the trend we start to see, is the superstores have generally, especially with kind of taking the lead and pushing back on the manufacturers in terms of pricing. Consumers have responded positively with visit trends here. This is one too we've talked a little bit about, but holiday again is the idea where people are willing to spend more for holidays and events right now. And so, not a shock that Hallmark sees a big boost ahead of Mother's Day. I don't think that's any secret there. But the numbers here, they're looking at this kind of the number before a Mother's Day, compared to the normal Saturday that you see, just some big numbers here. And in fact, if we look at kind of certain categories like specialty, retail like this. We do see that visitation trends around holidays are above where they were pre-pandemic, whereas a lot of times, the other categories or other times of the year, they're below. So this willingness to spend around events is definitely a trend. We continue to see it this year. That's why we're starting to see, I think, so much pull forward. Halloween in July, for example, people have shown a willingness to spend for these different things. They become bigger and more important on the calendar. And so I think that's why we're seeing that. It's interesting too, if we look kind of like just one anecdote on this one too, is if we look at fine dining, we actually see visit dwell time is actually up significantly. And I think a lot of that speaks to the idea of holidays. That, hey, I may not be going out to eat as much, but I certainly, if I'm going to, I'm going to make the most of it. Most retail categories we see dwell time down actually because of buy online, pick up in store, people doing more pre-visit research. But these entertainment categories, we definitely see a big spike, particularly around holidays. So I think one of those trends that we're starting to see a lot of CPG companies and retailers take advantage of in terms of marketing and promotion around holidays.
I know we don't have the data right in front of us, but off the top of your head or the next time we talk, what holiday do you find typically, consumers wait till the absolute last minute?
It's still Christmas, honestly. I mean, we do see that big pull forward. I mean, we're starting to see Black Friday as early as October now. But if we look at the visitation data, it is right before. I mean, that last week before holiday is always pretty big there. So that's the one that really jumps out to me in terms of where people wait till the absolute last minute. Yeah, you do a lot of your shopping list early on, but maybe you forgot people, or maybe there's something else, or maybe there's a deal you find in the last couple of days. We always do see that big spike, that last little big push on Christmas and the end of your holidays.
Yeah, I think that what we're seeing is that just the patterns and how people think about spending, right? I think, as you start thinking about Amazon Prime and some of these other big shopping festivals, is that people also have their list for themselves.
Yeah.
And so they're kind of like knocking that out first, and then they're getting to kind of their friends and family. But there's certainly more intention. But if they're getting, they've got their budgets, and if they're able to buy more because of great deals that they found, I think that we're continuing to see a more intentional consumer and one who plans out a bit more.
Yeah, and I think, when we talk about events and holidays, you're exactly right. Events can take a lot of different forms, and our visitation data for physical retailers around Prime Day was pretty strong too. I mean, you had Target Circle Days or Circle Week. Walmart had a series of promotions as well. Pretty strong visitation data from those as well. So it can be an event around shopping as well. In a lot of ways, reminds me of some of the holidays that the Chinese e-commerce companies have created around things, and really almost Prime Day has become a holiday into its own. In terms of shopping behavior right now.
Oh, I mean, I was on the phone with folks and they're like, "What did you buy on Prime Day?" Right? I mean, it's like, these kinds of things. And so but it does create like this festivization, if you will, around shopping. And I think that that's really good to make it fun and experiential, and something we can share with others. And I think we're just seeing the beginning of that.
We're also seeing the fear of missing out element too. Like, I Prime Day, I get the question like, "What did you buy?" Well, I haven't bought anything. I need to buy something, and so we see that, the kind of the fear of missing out play out a little bit as well here. So it is interesting to see behavior around that. So
Exactly. No, you're exactly right.
we covered this, but just kind of bring home the point. We are starting to see a shift away from big box retail. A lot of that has to do with migration. This is exactly what I talked about with Ace Hardware and Harbor Freight. If you look at kind of the big market share gains on this chart, you've got Ace Hardware with almost 2 points of market share gain. You've got Harbor Freight, which we don't have the percentages on here, but a pretty big pickup as well. So we are starting to see small box retail really become a movement, and a lot of it's because of necessity, because where people are moving. But there's also other elements about it. Maybe you can use a smaller format to better curate to that exact audience who's in that trade area. We do see grocers, we do see department stores, we do see other groups get behind that. So just the idea that, in this environment, a lot of cases, small box are winning out.
Yeah, no, I think it's also in the smaller boxes, right? If you're going, week to week, you're also in many cases, working with the same person who's helping you solve this challenge or that challenge. And so I think there's something to be said also for the customer service angle that you're getting in small box. And it's a trend, I think, that has accelerated faster than we expected.
Yeah,
But yeah,
I would agree.
certainly an interesting one. Oh, this is like I'm like one of my favorite categories, and it's like they've fallen down and can't get back up.
Yeah, but yeah, with the small format department stores, I mean, I think that's where we're starting to see, going back to the department store discussion and that customer service element. I think you're right. If you look at kind of the smaller formats here, and we've got the Bloomies at Old Orchard, which is right by my house. I get to see it in practice about every weekend. It is really amazing to see the assortment and the staffing levels. I think you're exactly right. It really dovetails. It sets up nicely for a better experience when you've got a smaller format. You're not dealing with such a large section, such a wide amount of products. You've got specialists in the store that know that product and can deliver on that and give that customer what they need. So I think that's been a lot of why we've seen that. And so the success we're seeing, right, what we're showing is just kind of the urban visitors or the different groups that are visiting these locations, but overall visitation trends, particularly if we adjust for visits per square foot, some really encouraging results. So I expect to see more of these kind of smaller format, specialized, department store formats start to pop up nationwide.
Yeah, and I think that the encouraging thing here is that Tony Spring, who was leading Bloomingdale's when a lot of this work was done, is now at Macy's, and so
Yeah.
a lot of that innovation and kind of asking all of the right questions is now he can now have much more of an impact. So I'm certainly looking forward to kind of what 25 holds for them.
Yeah, and it's not just department stores. What we see, it's even warehouse clubs are starting to experiment with smaller format. The categories that you would have never expected to go smaller format, like warehouse, Kia or something like that, we're also starting to see these smaller format and the visitation trends. Even if you adjust for kind of that honeymoon period after they open up, some really encouraging results. I mean, if you look at the BJ's wholesale, the small format compared to the Rhode Island nationwide average, some really strong numbers, and it kind of speaks to this curated assortment. Maybe I don't need to have everything under one spot, and if I've got a trade area with my target audience and I can find the right products for them in a smaller box, they will come to us too. So innovation, we talked about people looking for value, but also uniqueness and innovation. That can happen, just by virtue of being in a smaller format. So there is that element of kind of curating these things with the right audience.
Absolutely.
Figure we got to wrap up and talk a little bit about travel. And I hinted at this earlier. We are starting to see a better balance between experiences and goods this year, but that by no means says that travel has been forgotten. I think it's still a big year for travel. We are starting to see domestic travel kind of pick up in certain areas as well. We've got some visitation data on this slide about Los Angeles and New York. We are starting to see a pickup in visitation trends from lower income as well as kind of younger audiences. That's what our data is showing here as well. Maybe that group that has been a little bit under pressure, maybe is pent up demand. We're starting to see a little bit more visitation on that. So again, overall, it's been a little bit more balanced, but that lower middle income consumer, maybe it's pent up demand. Maybe it's something like, hey, we've seen a little bit of relief on inflation. Maybe we'll take a small vacation. We have started to see a little bit more, encouragement on that side.
Yeah, and I think that that's starting to show up in some of the retailers' numbers as well. So, there's this, kind of traveling to see the sites, but some of that may involve retail also. And I think some of the retailers are much more focused on, this customer than they've been, because there are more of them. And
Yeah.
it's, kind of everything's lining up quite well.
Yep. I would agree with that too. We'll quickly go on this. One of the things we have seen, this does tie into the value equation, but California has been one of those states that's been very interesting to watch. What our data shows, and for those who are not as familiar on the QSR space here, but what we saw is that April 1st, the state of California increased minimum wage for food service, with chains of a certain size, as well as healthcare workers, from $16 to $20. Most of the chains in the state raised their prices between anywhere 5 to 15% as a result. And what we did see is that almost immediately there was pushback among consumers. I'd say, before the minimum wage increase went into effect, we saw, generally speaking, California QSR chains were outperforming the national average. Ever since then, basically almost every week outside of one or two, California's underperformed on the QSR side. So we definitely see that impact. And when people are raising prices, consumers push back immediately. So this is something where if we look at kind of the corresponding, where do they go? A lot of it is value grocery, a lot of it's convenience stores. So something to keep in mind as some of these regulations take place, there can be a pretty substantial impact on things.
How do you think this plays out?
Um, well, I think it's gonna be interesting to see, what happens on the employment front. If we start to see QSR take workers from from grocery and other categories as well. I do think, we're going to see. I don't think. I think a lot of states are going to take a wait and see approach on this one before anybody else thinks of raising, minimum wage. I think some of the data has been well documented out there this time, so I think we're going to kind of say wait and see approach on this one. But over time, I do think we'll continue to see wages go up. Uh, but we're also seeing kind of the trend towards more automation, other ways to reduce the overall expenses of a restaurant. So I think that may help to accelerate some of the more innovation and automation. We've looked at a couple of the chains that have rolled out, kind of the automatic make line, like a Sweetgreen, or Chipotle hasn't opened yet, but Sweetgreen has a location in Naperville, Illinois, that we've looked at the data. Really impressive throughput numbers on that. So it's gonna be interesting to see how that plays out. I think we will see a point of normalization with the price increases, but something's got to give too, because that will hit margins for these companies, and so it may accelerate some of the technology things that we're seeing.
Yeah, I think that's an excellent point. And a lot of this technology, which truthfully existed, you know, 5, 6 years ago, but it
Exactly.
was like the cost.
Yeah.
And now, as you kind of think about ROI and kind of where that kind of weighs out, Sweetgreens, I think, is an excellent example in terms of what we're seeing. And they also have just such high demand and throughput.
Yeah.
You've got to automate, right, some of this in order to serve customers well. So there may be like a win-win-win across the board. You've got employees who are really happy with their wages. You've got customers who are happy because, right, they're getting through the store and it's more accurate. And you've got higher ROI. So it truly could be a win across the board.
Yeah, you're right. And I think some of the technologies that we're just starting to see, like the automated make line, a lot of the technologies that have been out there are just not scalable, or the technology just isn't quite there. We saw McDonald's pull back with, AI voice ordering. And, obviously there's others like Taco Bell that are embracing that. But the automated make line, is one I'm like, okay, I can start to see at least this being a little bit more scalable than some of the other technologies, especially if it's kind of built for new formats or new stores. You're like, okay, maybe I start to see a little bit more. And, a lot of times, this, because of necessities, it's gotten too costly to operate a restaurant. We need some of that automation. And so I agree, it could end up being a win-win-win here.
Oh, it should be amazing.
We talked a little bit about holiday, but this just kind of reiterating the point that if you look at kind of where we are with certain categories in terms of, baseline, we do see more and more as we kind of look at the numbers here, this holiday spikes that, people are really resonating and really gravitating towards different categories during holidays right now. So, and that's not going to change. I think we're going to continue to see it. And I think, again, we'll probably start to see a lot more Halloween marketing right around the corner here. I think that's going to be right on the heels of back to schools. So
What do you think we've seen so far? And I know we have a slide on back to school as it relates to prior periods.
yeah, it's a great question, and timely. Good tee up on that question here. What we are seeing is kind of a lot of the trends that we've already talked about. We're seeing the more value focused retailers. So certainly superstores have won out. So we kind of look at kind of the back to school period in July. We've seen off price do very well, and I think that kind of stands out with, I want something unique and differentiated, but at a value price. I think that's certainly prevailing part of that story as well. So I think it kind of dovetails nicely that, consumers are willing to spend. The people going back to school, they have a different set of expectations. They want to look different. They want to stand out. They're going to find ways to do that with a value budget. So I think those are kind of the messages we're seeing. Honestly, with the numbers we saw for particularly these categories leads us to believe it's still a pretty strong back to school on a relative basis. I mean, it's not blowout numbers, but it's certainly above the trend line for a lot of these chains, at least kind of as we started, at least compared to earlier in the year. So some pretty encouraging numbers in back to school right now.
Which is great. feel like everyone's inventories are very well controlled in this
Yeah.
area. Maybe we'll run the risk because, right, if you think about it, we've just started to see some schools go back. And
Yeah.
I know some retailers are telling us they've sold. I mean, it's not that you can't like reallocate, but a majority of what they had brought in for back to school and back to college, they're kind of like 75-80% of the way through it.
That's generally consistent with what we've heard too, is that, there's been some pretty good turnover at the, certain back to school products right now. So it'll be interesting to see. It does leave the question, do we have a situation of inventory shortage for those later start periods? Be interesting to watch over the next month or so.
And then how does that kind of like roll itself forward into what people are thinking about for holiday too?
Yeah, exactly. And then, I guess that's kind of the ultimate question here is what do we set up for holiday? I think a lot of these trends that we see are going to continue to play out. I don't think there's anything in the data that says we're going to see a big reversal in behavior. Yes, we did see a pretty big hit to the stock market, and you run the risk at that point of do we see any kind of changes in wealth effect or changes in behavior because of that? But I don't think we have. At this point, I don't think we've seen enough. Typically, it takes kind of a bigger, kind of 20-25% hit on the stock market or housing market to really impact consumer behavior. So anyways, to kind of get back to your question, I think that we are talking about a very value conscious consumer, ones that's looking for deals, looking for uniqueness. They are willing to spend and will spend around holidays. But that's really kind of the prevailing message I see from the retailers we work with, the mall operators we work with, the CPG companies we work with. That's how groups are winning right now, is kind of differentiated value or innovative value or novel value, however you want to kind of frame it.
Yeah, I'll tell you, we did a lot of work around correlation analyses with regards to stock market. And typically it's actually when people get their 401k statements. So, because like that's a broader group. So I think that, that's a few months off. And if anything, maybe we see a reversal, but no, I think that's interesting. So I think we have all of 5 minutes and we have many questions in the chat. I don't want to I want to encourage people to keep them coming so we will get them answered. But this was interesting. Do you think holiday hitting this is from Molly, do you think holiday hitting so early is an attempt to pull traffic into the locations?
Yeah, I think there's certainly that element too. Let's get ahead of that, and it's get there. The one that kind of gets it out there first, I think, is going to generally be an early. They will get the visits for it, particularly if it's kind of unique. There's this element too. Hey, I want to be the first to do it. I want to be the one to stand out and differentiate myself. So I think there is certainly this element of let's get that person in early, get that sale booked earlier. I think there certainly is that element why we're seeing those earlier promotions.
And then there was a question, I think it was when we were looking at overlap between McDonald's and some of the grocery chains.
Yep.
Somebody asked for the source of the data and whatever you can
Yeah, I
share.
mean, it's Placer data. I mean, that's exactly what we're looking at. I mean, with our data, we can observe, at the individual property level, people have gone in to a McDonald's, but then also cross shop and Aldi. So that data is coming straight from us. We can roll that all up to the chain level. So that's one of the nice features. And if you're interested in learning more, we'd be happy to show you.
Right. This is from Michael. Any insight on the contrast in visits to car wash chains and auto parts?
Yeah, it's an interesting one. Auto parts, as you pointed out, Deborah, is kind of a play on people wanting to save money. Maybe they'll try to repair that broken part in their car, especially with the age of cars being up where it is, usage of cars being what it is. We do see that. Car wash is an interesting category too, because there's been so much consolidation in this category. If we look at kind of the chain visits, the visits to car wash chains is actually up like 6 or 7 times since like 6-7x since pre-pandemic, because the chains are consolidating and a lot of it's going away from independent shops to chains themselves. So I think it's a category that's doing well, but I think some of the numbers are being impacted because of just the growth that we've seen. It just kind of it's grown so fast. Maybe we've seen a little bit more of a pause this year in terms of year-over-year visits. And they also had we talked about weather in January. That really hit them. The first quarter for the car wash companies was weak. So I think some of the numbers that we saw was largely a negative first quarter. Second quarter has been much stronger, but I think there is a weather element in the first half 24 versus 23 numbers.
And then someone asked specifically about REI, but I don't know if you want to talk about some of the, technical players and just what you're saying there.
Yeah, it's one that it's been a while since we looked at that category. I think we did see some improvement at REI compared to kind of, let's call it the more mainstream sporting goods stores. And I think some of that may be kind of your, the individuals who took up a new hobby and kind of really have gotten into it and now are starting to hit that replacement cycle. We talked about not quite hitting replacement cycles or some of the specialty category, but I do think REIs are such a look. There are certain categories, that certain, activities that people started to hit that need. Hey, maybe I need that new mountain bike. Maybe I need that new performance gear or something like that. So that's one where maybe we're starting to see the earlier signs of a replacement cycle start to happen. But it stood out. If I remember the date, I don't have the exact numbers, but it has stood out compared to some of the other sporting goods categories that we've seen. And, it's one of those ones too. If we look at kind of Dick's Sporting Goods, the House of Sport format, which is more experiential and more technical, has definitely outperformed the legacy stores there as well. So more credence to that idea.
Last question, just in the interest of time, and for those of you who we didn't get to, we're happy to answer these separately. But from Marco, I understand this webinar is about US shopper trends, but are you also looking into Canadian consumers, or is there a plan to do similar research into Canadian retail?
Something Placer certainly thought about. We're looking at opportunities with other countries as well. Nothing to share on that front, but certainly something we're interested in as well. And I would say, looking a lot of times at the U.S. data, sometimes that is a precursor for what's going on in Canada and Europe as well. So sometimes you can start to see trends early and start to say, hey, maybe this is going to happen in these regions as well. So something that we're thinking about always, but no news on that front.
Right. So, I mean, we covered the change in kind of consumers seeking for value. We talked about the stock market volatility. I think the deep dive we did into kind of grocery and what's happening there. I thought C-store innovation was an excellent call out.
Yeah.
Some of what we're seeing at Aldi, and we're also seeing this consolidation that's taking place kind of across the drugstore industry, and there are a lot of consumables that are purchased there. I think the retail media maturity was also an interesting call out from you, RJ, that not many people are talking about, because everyone's like, oh, it's still so new, but at the end of the day, we're seeing that pretty significantly. And then this kind of almost from a price, kind of race to the bottom in terms of price reductions, whether it's what we saw from the discounters or kind of QSR. There's a lot that's happening. If you think about this is just in one quarter.
Yeah, exactly.
The amount for people to digest is a lot, and I think that utilizing Placer data, having this understanding, I think really helps people, right? Like you talked about mixed use, right? Really rethinking their shorter term, but also their longer term plans. And I just want to give it to you to close this out.
I think you pretty well captured it. That was a great summary. So thank you. I really appreciate that. Exactly that. I mean, I think it is a really dynamic time in retail, and not just food retail. We talked about that, but across the board. And having better data makes you have better decisions. So I think not just Placer. There's a lot of great data sources out there too that really can help you figure out what's going on and get ahead of things.
Great. Thanks so much, RJ. See you next quarter.
Thank you.
Take care. Bye-bye.